So recently, one of the things I've been thinking about has been the crypto crash over the past week. We have seen in this episode suddenly at one point more than $800 billion wiped off just like that. And if you were to look at the total market capitalization of cryptos in totality, it is currently half of what it was in November 2021. That's not even very long ago. Now, many of you might think, Melvin, we have talked about crypto crashes a few times. We've established over many chats that cryptos are volatile for various reasons and crashes do happen. So what's so interesting about it? Well, for me, it's quite significant in the way it actually happened, in terms of what caused it, where it stemmed from. And this recent crash happened because of a stablecoin. Now, for most of you who don't know, stablecoins are a class of cryptocurrencies that are meant to be, by design, supposed to be stable, as the name suggests. And they're stable because they're able to maintain, supposedly by design, a one-to-one peg to US dollar in terms of their value by being backed by reserves of fiat currency or commodities, or in the recent example, more innovative way, by algorithms, codes that help them maintain the peg by maintaining a certain supply of other cryptocurrencies or other assets. And what has happened is one of the most valuable crypto assets, Terra, which is also the largest algorithmic stablecoin, actually crashed and collapsed. Terra, previously by design, was meant to hold its one-to-one peg of value by using code to maintain its supply, its reserve of Luna, which is its sister token, a token from the same organization that actually made Terra. And it's able to do this by automatically buying and selling basically Luna tokens. And what has happened is there was a sudden dump, massive dump of the coin itself, which many people believe to be a concerted attack against Terra, and the algorithm was not able to do this balancing act of actually maintaining Luna itself, and that led to this death spiral of value, and eventually the entire thing crashed. And needless to say, that crash was significant. Terra itself actually fell below $1, and Luna as well. Both of them are practically worthless at this point. In fact, if you were to look at Luna, that crash is truly very significant. Actually, earlier in the month, it was worth $120, and now basically not even $1. Many points actually below 20 cents. And it truly, truly is such a tragic collapse. Many people have actually invested a lot of money into both Terra and Luna. They were significant tokens, coins that have actually a lot of credibility, being backed by very notable investors, like for example, even on the institutional level, Galaxy Digital, Pantera Capital, many of these notable investors. And yet, despite all this credibility and many people praising both of them, they have both collapsed. And of course, there has been a network effect as well that we'll talk about shortly. But this collapse is very significant because as a stablecoin, Terra was meant to be very, very stable. See, in the crypto ecosystem, which is very volatile for many reasons we talked about, stablecoins are supposed to be the foundation, the safe haven. You could sort that because the value of that is very stable. And actually, a lot of people have actually invested and bought stablecoins almost in the same ways that they would actually use a bank. They would store their wealth there because they saw it as being impervious to the market fluctuations of the general financial markets, but also the crypto market fluctuations. And it offered more benefits than a bank because you could potentially save on the transactional costs, perhaps the speed of transactions, and also the efficiency of the blockchain, supposedly. But what we have seen is that stablecoins are not impervious to the volatility and certainly the overall challenges of cryptocurrencies that we talked about, because with this recent example, we've seen exactly that. We have also seen other stablecoins actually suffer as well. That many of them in this recent episode lost their peg, even for a moment, which really does bring it into question. But the biggest thing is really on this aspect. There's indeed actually no accountability or transparency with these stablecoins, despite the fact that many of its investors actually resort to it in the same way they would actually use a bank. Indeed, even with Tether recently, there is no transparency. There were a lot of fears and concerns as to whether Tether is actually has the reserves of the US dollar that it claims to have. And even recent hearing, with the Attorney General, that's been established as being not exactly true. But indeed, in this Terra instance, we've seen that despite the fact that we think this technology is incredibly great, and there were a lot of efforts to try and rescue Terra itself, again, there's no true transparency, and indeed, there's no recourse for many people who have actually invested into it, which really does raise the question of whether more regulation is needed. We tend to talk about decentralization and really cryptocurrencies overall, and really eschew its benefits of how great it is. But truly in these instances, we can see that without any regulatory recourse, many of these investors that bought into these things, they are totally left with no course of action, totally helpless. And in both instances of both Terra and Luna, at this point, it seems to be there's really no way out. And a lot of people have truly lost their money. In fact, if you were to go on Reddit and really online, a lot of people sharing these stories, they've actually lost their life savings by truly believing in the stability of Terra and generally in the investment potential of Luna, and truly very sad to see the outcome of what has happened. But the overall network effect is also very interesting. Indeed, the crash really happened to both Terra and Luna, but we've also seen this widespread network effect that's spread throughout to affect other cryptocurrencies and other stablecoins. And that really does show us and highlight in terms of how significant and truly how extraordinary that crash was, that most of the valuation of cryptos overall, the crypto ecosystem, is largely based on very fleeting speculation. A lot of really fleeting investors and really speculators that are going to leave at any moment at signs of trouble. And we've seen exactly that. Truly much more significant than what we see in the traditional financial markets. And that does raise a lot of concern. But I think the final thing that we should really think about overall is that a lot of these technologies, especially the way that they're being promoted, and as we've seen in the way that celebrities have promoted some of these things, we tend to only focus on the possibilities, but truly not the situations that we've seen right now, which shows you that despite all the brightness and the promises of the potential of stablecoins and blockchains, there's actually a lot of things that could go wrong, and that decentralization itself, which supposedly offers all these great benefits of this future of the next evolution of finance, is not without very significant risks that have transpired again and again and to these various degrees of scale, but truly do affect people in very significant ways. And it's funny because I think a lot of people who are very into crypto, they tend to really downplay this. They tend to downplay the significant risk that's being posed, and potentially how many of these great crypto projects that eschew all these great values, they could actually be totally undermined suddenly, as we have seen. They're not impervious to that at all, even stablecoins themselves, which were at one point meant to be the foundations of a more stable crypto ecosystem. Again, the same things might apply there too. But whatever it is that you might think of what's happened recently, it does raise a lot of questions. And I think overall, when we really think about regulation, which is something that's always been put against the blockchain, decentralization, and really the crypto environment, you can see in these instances why it is also very important to have regulatory oversight. And that does actually raise an existential question about really the crypto landscape. When you have financial instruments and really financial devices that are designed to supposedly help us, just because of the fact that we could actually put so much into it, our life savings depend entirely on it, can they truly work with our regulation? What sort of recourse would we have? What sort of accountability would we have? What sort of transparency? Who is to say that when things do really go wrong, what are we supposed to do in instances where there are no regulation or no oversight in terms of actually legal avenues that we could go to? And it does really make you think a lot about it. All these recent promotions in recent years of how great crypto, blockchain, stablecoins are, we don't really think about instances like this. Sure, recently we've seen some slight recovery of some of the cryptos, but still, Terra and Luna, many of the people who have actually bought into it, they currently have absolutely no recourse. A lot of value lost there. And we're talking about hard-earned money, people who actually believe in these projects. And that does really make you think a lot about it.